President Trump addressing the World Economic Forum today in Davos at 11 a.m. Eastern. He will speak by video conference, followed by a short discussion featuring questions from Bank of America CEO Brian Moynihan and Santander CEO Anna Botín, among others. Trump joining Sean Hannity last night on Fox for his first sit-down interview since Inauguration Day in the Oval Office. He discussed reconciliation and the importance of extending those tax cuts. Watch.
I like the concept of the one bill. It could be something else. It could be a smaller bill and a big bill. Right. But as long as we get to the right answer, I will say that Los Angeles has changed everything because a lot of money is going to be necessary for Los Angeles. You know, if they don't work with us on the Trump tax cuts extending, that would mean the taxes would go up more than any tax hike in the history of our country. But they'll fight us on that. They fight us on things. It's incredible.
Here, I ran into...
They don't use common sense. In my opinion, the Democrats don't use common sense.
Joining me now is the co-founder and co-chairman of the Carlyle Group, David Rubenstein. He's also the owner and CEO of the Baltimore Orioles. I think we were talking about that before you actually made the investment.
Yes,
you didn't want
right.
to confirm it. Congrats on that.
Thank you very much.
Good to see you, David.
My pleasure.
Assess the story for us. President Trump now in office, talking about all his priorities, from the border to tapping into energy to, of course, extending the tax cuts. Your reaction?
There's no doubt that when you've been president once and you have 4 years out of office and you have a chance to think about what you want to do or could have done before, you're ready when you come in a second time. We haven't had this before except for Grover Cleveland. And clearly, President Trump is ready to be president in the second term. He's got a period of time where there's a lot of goodwill. His popularity is pretty high, and I'm pretty sure he's going to get most of what he wants out of Congress.
Yeah, and they're talking about either one or two bills. Does it matter to you?
Well, it doesn't matter to most people. It really deals with the reconciliation. If you can get it in one bill and you can do it all in one reconciliation bill, it makes it easier because you don't have to worry about a filibuster in the Senate. But I don't really think he's going to worry that much or should worry that much about not getting his tax bill through. That'll get through. The other stuff will be more complicated, I think.
What will be complicated, do you think?
Well, I think some of the things he wants to do to repeal some of the things that were done in the Inflation Reduction Act, for example, may be a challenge. Some of the things they might want to do to impound some spending, that might be a challenge. And executive orders may be challenged as well in court. But generally, I think President Trump has got Congress pretty much where he wants it. He'd rather have more votes in the House, for sure. But he's got enough votes to get pretty much anything he wants through, I think, for the foreseeable future. The Senate, he pretty much can get through what he wants.
What's your take on the macro story right now? The economy expected to grow by 2.33% this year. The Conference Board saying that it will be helped by improving credit conditions, obviously the rising stock market, and increased manufacturing. The International Monetary Fund is a bit more positive, forecasting 2.7% growth in 2025. IMF Managing Director Kristalina Georgieva joined me on this program yesterday. Watch.
The U.S. is doing really well, and we expect that it will continue to outperform the rest of the world. And what we see is that at the heart of outperforming is productivity growth. In the United States, productivity is going up and up and up every single year. In the rest of the world, productivity is like a sleeping beauty. It's there, but it does nothing for the economy.
Interesting divergence here. You've got the United States looking good, a lot of optimism about it. Europe, not so much.
Well, post-COVID, the United States has surged past Europe. Europe used to have a bigger GDP than the United States because they have 250 million people more. But we now have a bigger GDP than Europe by about 20-some% or more. And that's because our technology has been so superior to everything in Europe. Think about this. You can't get through the day without using American technology. You don't need to use a European technology to get through the day. And Europeans are using American technology, and that's really helping American companies. Europe has not recovered from COVID quite as much as we did, and they didn't recover from the Great Recession quite as much as we did. So I think Europe is not as strong economically as we are, and they don't have a strong leader in Europe right now because of the political turmoil.
There's also talk of structural change that is needed in Europe. Do you agree with that?
If they could do structural change, it would be great. The best thing Europe could do was actually combine the EU with Great Britain. That's not going to happen. But actually, if they could have a common currency for all of Europe, that would be good. They don't have that. If they could have one monetary policy and one fiscal policy, that would be good, too. But they don't have that. We have the advantage in the United States of having a common fiscal policy, common monetary policy, and the only reserve currency in the world. And that's one of our strengths, the only reserve currency in the world. People have to buy dollars. And our strong dollar, I think, is really helping the United States.
That's a great point. Let me me get your take on private equity right now. In terms of valuations right now, there's a lot of expectation that we'll see animal spirits come. We'll see more IPOs. We'll see more M&A. Will private equity, though, buy into that? Do you think that they will look at valuations and say, yeah, I want to take this, I want to take that exit strategy now?
Yes, I do.
Yeah.
I think that private equity firms have been sitting on companies for a while, waiting for the economy to be a little bit better and for the M&A environment to be better, for the IPO environment to be better. And I think it's now going to be here. I think there's going to be less regulatory oversight that private equity people would say. So, yeah, I do think it's going to be somewhat close to a golden age for private equity in the next 2 years or so.
Terrific. What about transparency? There's a group of U.S. pension funds pushing private equity firms to open up about fees, about investment returns. The Wall Street Journal reporting that the Institutional Limited Partners Association proposes new guidelines to standardize financial reporting by private equity firms. Your thoughts?
Well, the largest private equity firms are publicly traded, so we have so much information out there that I don't know much more we can give people. Obviously, not every private equity firm is publicly traded, but the big ones are really publicly traded, and they really lead the market. So I'm not against more transparency, but there is plenty of transparency already.
And what's your take in terms of the sectors that will lead? I mean, clearly we've got this huge investment in AI. Is that where the leadership will be in America? Or talk to us about the sectors. Energy, perhaps?
Energy will be very attractive because President Trump is trying to push energy, and I think we already are producing 13 million barrels a day. Whether we can do more, I'm not sure, but clearly that's going to be a good sector. Artificial intelligence and all technology will be good. Defense will be very good. We've got to replenish our stocks that we've been using for the war in Ukraine and Israel. So the defense will do quite well, particularly defense technology. So I think those are going to be strong areas. And I do think ultimately home building will be strong too, because we haven't really rebuilt our home stock for quite some time. And interest rates, as they go down, I think will make it more attractive for people who want to buy homes.
Defense is a great point, David. And banks, probably a big beneficiary of this deregulatory push.
Banks are really very happy because there'll be deregulatory kinds of things. The person in charge of regulatory matters at the Fed has stepped down from that position. I think the banks are pretty happy with that.
David, we'll leave it there. Great to talk with you.
My pleasure. Thank you.
Thank you so much. David Rubenstein here.